Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about SIS, a very interesting security systems provider, and it looks like that it is going to gain a lot in these times. So let's understand what is going on in the company and what needs to be done. So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about SIS, the company was established in 1985 and they are the largest security systems service provider in India. They are also into cash logistics and facility management. So they provide that ATM service. They provide ATM services and they provide the cash transfer to ATMs, etc., as well as security systems for banks, ATMs, as well as for home, and they are into different you can say industries. So clients are in various industries such as in heavy industry, machinery, engineering, automobile, construction. They're also into food and beverage, FMCG, home consumer play, as I said, railway security systems in you say metro or the Indian railways, etc. And they are globally present as well as present in India. They are the largest players here in India as well as in Australia. So they have a lot of bandwidth across the globe. The market cap of the company is around 5,500 crores, and they have the leadership in cash management and logistics management across the globe in Australia and in India. If you look at the numbers of the current quarter this year compared to last year, first of all, they are spread across 29 states here in India and 630 districts or so. The sales have been up around 15.5% year on year, and the profits are up at 22% year on year when I looked at the numbers. Although the debt has increased sharply, so from 270 odd crores last year, the debt is around 440 crores at the moment. The return on equity, as you see, is around 18%, which is not great, but according to industry standards. And operating profit margin is around 6%. So currently it is trading at 31 times earnings, which I would say is not quite very cheap, but not expensive either. If you look at the performance of the stock is down around 45-46% from the peak of 2018 and have sharply fallen in the last 1 month, as has other small cap stocks. The small cap index, and I'll make a video on small cap index later on in this week, probably next week, and it has fallen from 20,800 all the way to 8,700. So there has been a climatic fall in the small cap index. So in that regard, these stocks would also fall. The debt is high considering the kind of business that SIS is into. The results are decent, they are good, but the return ratios are not great. So they are I would say average. And in my opinion, it is still trading at expensive valuations of around 30-31 times earnings. So, what is the current scenario? What has changed, and why this company is in focus, and why I'm saying that it could be a two-quarter wonder? Actually, I was watching CNBC TV 18 yesterday, and the market was falling sharply, and then the managing director of the company was on call around 1:32 p.m. and he said that the company has got a lot of orders, and there's a spurt in the demand for security services, for cameras, for installation of devices, as well as for people in this security division across globe, in Singapore, in India, and across India, because of this lockdown situation, as well as people are, or the companies are looking for to install better security systems for future. And the demand has spurred up so much that they are at working at near full capacity and working full time day and night. And it is not only here in India but also in Singapore. In fact, the demand in Singapore and Australia has risen sharply as well, and the stock started to move up quite enormously, around 14-15% up in a shot. And actually, The managing director was very positive about the demand and for the next at least a couple of quarters, and they said that these 2 quarters would be perhaps one of the best because of the current scenario that is prevailing across India. So in that regard, we feel that the company may produce extraordinarily good numbers in the next 2 quarters, and that could sustain over the next 4 to 5 quarters, as we see that the situation of lockdown may just continue for another month or so, even after this 21-day period that is being assessed by many experts. So in all that respect, and that the stock has corrected around 40-45% from the peak, it looks like a good buy for a 2-3 quarter play. Management being positive means that the numbers should be pretty good, and in that regard, this company came into limelight, and I thought of making a video for this. So, what is my opinion about the stock? Before I tell that, I want to say that the company as a whole is pretty good. So, in that regard, the kind of services that they provide on a long term basis, on an investment point of view, this looks pretty good. So, in that regard, at around 380, 390, you can go ahead and buy the stock, but for a longer period of time as well. And on any declines, you can add on to it. Although the only problem that I see in the company is debt, and I do not prefer companies with high debt, and this one is, and that's why I would say that you put only 2-3% of your total portfolio in the stock, or if you are buying only say 5 stocks in your portfolio, put only 10-12% into it and put more into large caps. I still believe that you should look for large caps. There would be further declines in the stock market, so it's better to look for companies which are in the larger mid cap arena, such as Britannia, etc., and so on and so forth, say Eicher Motors, and there are many more above 20-25,000 crore market cap. And in such a volatile market, you need to be very vigilant and be very careful in buying such stocks. They could just show a 20-30% up move, and you could just buy them in the middle of that up move and are not able to get out of it, and then the stock comes back around 50-60%, and you are just left holding the baby like that. So in that respect, it is a risky trade to take, but if you're buying it for the next 5-6 years, then it is a good time to do an SIP. Buy 20% now, buy another 20% on declines, and markets will give you opportunity with the kind of scenario that is taking place globally. I believe markets will give you enough opportunities to get into it. On technical terms, the stock is a very good buy around 330-340 rupees, or any declines to 370. So between 340 to 370 are very good opportunities to buy. Above 420, 430, this will be a stock that would be very bullish. But I would prefer, if I were you, I would prefer sharp falls in the market to accumulate such stocks. I still believe 7800, 7900 is expensive for the market, with the kind of commentary coming through from analysts and from economic experts. It seems like that the growth for FY21 could be curtailed down to 3% or less than 3%, maybe around 2-2.5%. In that respect, it seems like we will have a 460 or 470 rupees EPS, and hence at around at around 8,000 or so, we are still trading at 17 times earnings, which is expensive considering the kind of lockdown that we are facing at the moment. So wait for declines closer to 7,000, and these will be very good opportunities to buy into such stocks. So this was my video on SIS. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. And kindly subscribe to my Patreon channel. I'll put the link in the description box. Thanks a lot for watching.